Alright, so this video is about the formal balancing of accounts. Now you've balanced accounts before, but you used something called a pencil balance. So you just looked at that side, you looked at that side, and you took one side away from the other. Now we're going one step further here. We're not going to do a dodgy pencil balance. We're going to do a formal balance the way that a proper accountant will do on the 30th of June. Now I'm going to use this example here that I've already done. Now I don't need this general journal to do a formal balance. I also don't need to balance my drawings account because that's got 2,000 on this side, 2,000 on that side. So I'm not going to formally balance that one. I'm going to focus on this capital account, and I'm going to formally balance the capital account so you can see what it looks like to formally balance something. So I'll be back in a second with a clear board. Alright, so that looks a little better. We're going to formally balance our capital account here. Now there's a few steps to follow. So I'm going to write those steps down and I'm going to do it at the same time. So step one here is to add both sides. Now you're not doing it like on the ledger, you're just doing it on a scrap piece of paper so you know what's going on. Alright, so I've got 2,000 on that side, so that's just 2,000. So I'm just gonna do it down here. This is gonna be my scrap piece of paper. So the left hand side is 2,000. And the right hand side is 46,000 plus 53,700, which is 99,700. Alright, so I've added up the left hand side. There was only one thing, so I didn't need to add anything. And I've added up the right hand side. There were two values there, so I added them up. Alright, that's pretty good so far. So step two here is to take the smaller number from the larger number. Easy. 99,700 minus 2,000. Equals 97,700. Now you're familiar with that because that's your pencil balance. So far all I've done is my pencil balance. From here, this is where we formalize it. Okay, so from here we enter the result on the smaller side, the result from step two, and then we write balance carried down. That's what balance CD means, carry down. Now what do we mean by carry down? We mean we're taking that balance and we're going to take it from this year and we're going to carry it down to the next year. So that's what carried down means. Alright, so I'm just going to do that. I know I'm getting in the way here. So balance carried down, and the balance we're carrying down is this amount here, 97,700. Alright, that's pretty good so far. We just need to sort of close it down now. Sorry, I should be careful about my language. We need to balance it now, not close it down. So next step here is to enter the total on both sides. Sorry, lost my pen. Our next step here is to enter the total on both sides here. This is where we balance it. So top line and two lines underneath. That's the convention. Those added together makes 99,700. And those added together make 99,700. Okay, so you can see we balanced it. 99,700 on this side, 99,700 on this side. Some of you will make the mistake, just as I was about to, is to enter this result, but it's just this number plus this number, and this number plus this number, which is the same. Okay, one last step. Okay, so last step here, on the larger side, write balance brought down and the value. Now, what? Okay, look at what we've done here. We've taken our capital account. We had a capital balance. Before we did all of this rubbish, we had a capital balance of 97,700. That's our pencil balance at the end of the year. Our capital account is worth that. Now, we do this to sort of balance everything out. So there's zero on this side. 99,700, 99,700, it all balances. But then, on July 1st, everything needs to open up again and the business needs to run as usual. So, on July 1st, that balance, which was 97,700 on the credit side, needs to return. And it does so by taking it from here, balance carried down, because it's carrying down to the next year, and we write balance brought down, and we carry it down to the next year, to July 1st. So the balance brought down will be the same as the balance carried down, which is 97,700. Okay, that's really what we've done. So we've taken our account, we've balanced it, we formally balanced it, formal balancing of accounts. We formally balanced it on the 30th of June, and then on the 1st of July, we open up our account again, balance brought down. All of this happens pretty sort of instantaneously, I guess. Okay, so there's your formal balancing of accounts. Now, when do you formally balance an account? You formally balance any owner's equity accounts. So that's essentially capital. You formally balance any asset accounts. Okay, we do exactly the same thing with all of our asset accounts. And you formally balance any liabilities. Now, of course, any asset accounts are going to end up with sort of the reverse, because an asset is a debit, so you would expect a balance brought down to appear on this side. Any liabilities will be the same as our capital account, because liabilities are credits, so a balance brought down on a liabilities account would appear here. All right, there's our formal balancing of accounts. Follow those steps whenever you're balancing an account. You shouldn't have too much trouble. All right.